Royal Dutch Shell purchasing BG Group of the UK for the equivalent of $70 billion US.
Yeah, that's right. Rolling the dice on this one. And Ben van Beurden, the boss of Shell, really making a huge wager here that these low energy prices that have seen, well, BG Group, the company's buying, seen its stock slide more than 30%. That these low energy prices offer the chance to scoop up assets reasonably. However, the market, perhaps not convinced. We did see Shell stock dropping as much as 7% in London trading. I've been looking at pre-market trading in North America. It's not down as much, but we'll check into that. But what a merger. I mean, Shell is just striking here, making itself a mega energy player. Now, it's not going to be quite as big as Exxon. Just back of the envelope, it had a market cap as of yesterday of about 200 billion. And so they're paying 70 billion here. So that brings the merged group up to about 270. Exxon has a market cap of about 360, but it's still a huge deal.
BG shares closed yesterday. They've rocketed higher today, as you can imagine. They closed yesterday at 900 pence per share. They're now up to about 1,200. This deal is priced at 1,367 pence. It is a cash and stock deal, so a decline in Royal Dutch Shell's share price affects the total deal value. Dennis Mitchell, there's a lot of speculation now about this maybe kicking off a round of M&A in this sector. Would you expect that, and would you expect to perhaps see it among Canadian players in this space?
It's possible. I mean, a lot of people have put out notes just overnight talking about how in 1998 this sort of kicked off the creation of a lot of the large E&P firms that dominate the globe now, whether it be Texaco or Mobil or Royal Dutch Shell for that matter. So it's possible, but I think in this deal in particular, the reason you've seen such a negative response is they've seemingly promised everything to everyone. A 50% premium on the shares, $2.5 billion of synergies, $30 billion of disposals, and we're going to institute a monstrous share buyback. So I mean, it's kind of like Christmas. You've got something out of the sack for everyone, and I think the market's a little skeptical they'll be able to deliver all of these things.
Interesting. What else can you tell us about that?
Well, obviously, people in BC will be thinking now, what does this mean for LNG? I mean, Shell still officially would like to build a massive multi-billion-dollar LNG project in BC. BG Group has been cooler on going ahead with its one, but obviously Shell as well, trying to maintain really increase its strength in the global LNG oligopoly. But that business has been under severe pressure, obviously, with the dropping oil price. There are fears that there's just too much global LNG capacity now. It's not that massive a market. And of course, China rapidly trying to curtail its energy use. Japan, of course, still needs massive amounts of LNG. So LNG is really the driver here, the huge capital needed. And obviously, the fewer competitors in the LNG business, the happier Shell will be. Chevron, though, of course, is a massive player there, and with their huge projects off Australia, and then the Australians as well themselves.
Do you think this makes Royal Dutch Shell more likely to be the company that succeeds on the West Coast?
It obviously gives them more muscle. Right. I mean, it's kind of a scale game. These global players, they want to, even if BC LNG is not that profitable because of the high cost base, they still want to have just access to it, because who knows, something could go wrong with another source of natural gas. They want to have a full portfolio. It's not just LNG, though. It's interesting. BG Group is also big in Brazil. And despite all the corruption woes of Petrobras, that's seen as a growing production area for oil.